Hi, everybody. Thank you for joining us and welcome to Self-Directed IRA Saturday. My name's Zach Wilson. I'm one of the IRA specialists here at Quest Trust Company. So, before we get started, got to give you the disclaimer. Keep in mind that everything you're about to see here is going to be for your educational purposes only. When you're working with Quest, it's important to understand the role that we're going to play when it comes to your retirement investments. Right? We're going to be here to facilitate just about every type of transaction you'd want to do within your retirement account, as well as offer as many free networking and education resources as we possibly can to both our clients and investors. But with that being said, Quest does not offer any sort of tax, legal, or investment advice, nor do we endorse any specific investment. We're here really just to answer your questions about how it all works and, like I said, facilitate those transactions. So, for those of you who don't know us, we are Quest Trust Company. We're the largest self-directed IRA custodian in the state of Texas. We have roughly 20,000 active investor clients all across the country, all 50 states, and we operate in 7 different countries. We have 2.7 billion in assets under administration as it stands right now. We have over 100 employees, 34 of which are certified IRA service professionals. What does that mean? That means whenever you give us a call, one, you're going to get a Quest employee who's going to answer the phone and be able to answer just about any question you would have when it comes to your IRA. And if you want to take a deeper dive into some more nuanced topics, we have 34 IRA service professionals there to take that dive with you. No matter what, we're going to get your questions answered. And right now, we have over $400 million in undirected cash sitting in our clients' accounts. Now, that represents opportunity, right? Whether you're part of that current Quest pool or you're someone who needs funds to get your deals done, that's where your opportunity lies. We all know with the hikes in interest rates, it's getting more and more expensive to borrow money. Right? When you go to these large institutions, it's really hard to get approved for the loans that you're looking for. This is why a lot of people are turning to private money, right? Like our clients here at Quest with that $400 million pool. But of course, before you make any investment at all, before you pursue any investment, the first step is always going to be to educate yourself, right? So utilize us as a resource. Check out our YouTube channel. Check out the Education Center on our website. We have tons and tons of videos, guys, going over every single topic you can possibly think of, starting from the basics of a self-directed IRA, what it is and how it works, all the way through syndication investments, private money lending, hard money. We're going to talk about all of those things. We have videos covering every single topic. So please utilize us as a resource because it's all free to you. But once you've got the education, you know what type of investment you want to make, the deal's not just going to make itself happen, right? So this is where the networking comes in. All right, we offer tons of networking events as well, just like the weekly self-directed IRA Saturday and Tuesday classes like you're joining right now. The virtual happy hour that's going to happen on the 4th Wednesday of every month, that's strictly dedicated to networking. All right, but by far our most common networking event is going to be the SDIRA socials on the 1st, 2nd, and 3rd Tuesday of every month. How this works is the first 30 minutes, we just strictly networking, right? We're going to serve you some food and drinks. We're going to let you meet everybody. You get to talk with everybody and see what everybody's looking to do. From there, we're going to have a presenter come out and they're going to present for about an hour over any given topic. We change it up every single time. And then at the end, you're going to be allowed to network. And we've even brought back deal pitching. So if you have a deal ready, right, whether you're looking to raise capital and you need capital for that deal, or you just have money and you're looking to lend it out to get a steady return, that's where you make it happen. Please take advantage of these networking opportunities where you can get in front of our clients. All right, this is going to be happening in Houston on the 1st Tuesday, Austin the 2nd Tuesday, and Dallas the 3rd Tuesday. All right, and coming up at the beginning of next month, we have our Quest Con. All right, this is going to be a completely virtual event. That's going to be December 9th and 10th. Right, we're going to have completely different speakers than we had at Quest Expo to be sure we're giving you just about every single perspective that we have in the real estate industry. Right, so what we're going to be doing the first day, we're going to take a look backwards. Right, we're going to look at 2022. We're going to look at what the market did. What were the indicators? What were the factors that determined that market behavior? What did people pursue that were successful investments? And what did people pursue that were not successful investments? Right, a lot of lessons to be learned when looking back at 2022. The second day, what we're going to do is we're going to look forward. We're going to start forecasting for 2023, right? We're going to have a bunch of different perspectives coming out, what they think the market's going to be doing, both in terms of just strictly housing, the prices going down, the cost of materials going up or down. All right. We're also going to talk about interest rates and how to go about addressing the potential rise or fall of interest rates. All right. So we're really going to try and plan out what strategies people are going to be doing going forward. And then maybe you'll get some insight as to what strategy is going to work best for you. All right, guys. So if that sounds like something you're interested in, please come and contact us. Reach out to any one of our IRA specialists. There's my contact information. Feel free to reach out directly to me. All right. So today, we're going to be covering something that I think is very important, right? And it's going to be a pretty short class. It's only going to be about 25 minutes, right? We got a recording from Robert Martinez. So what he's going to be going over is how to do due diligence on the syndicator, right? So any investment, obviously, it's very important that we're doing due diligence on whatever investment we're looking to make, right? That's an obvious thing. But depending on the type of investment you're looking to make, it's going to change the due diligence that you're looking to do. Right? When it comes to syndicating investments, obviously it's important to look at what area it's in, what the plans are for the investment. Is it going to be acquiring? Are they going to be developing a new business or a new apartment complex? Right? That's all important. But by far the most important factor when syndicating investing is going to be the syndicator themselves. So today, Robert Martinez, we have a recording from him that's going to go over how to find the best syndicator for you. So without further ado, we're going to go ahead and get that started for you. And then as usual, go ahead and throw questions in the chat. Even though it's a recording, Robert's not going to be here. We're going to do our best to answer any question that you would have during the video. And if something pops up after, keep throwing your questions in there. We'll go ahead and get those addressed. So Victor, you can go ahead and pull up Robert's video.
The Fed has done it again, and they have raised rates again. So what's going to happen now is going to be a flurry of real estate activity. And today I want to focus on multifamily. You know, I've gone through the Quest catalog and library of other presentations, and I want to do something unique. I'm not going to sit here and talk to you about why you should do apartment investing. I'm going to assume that by the time you're watching this, you know you want to do investing. What I want to do is help you get a little more educated on how to pick the right investment. My name is Robert Martinez. I own a company called Rockstar Capital. My claim to fame is I'm a 2-time National Apartment Owner of the Year. And I did that on the back of 15 100% cash out refinance events. And my company, Rockstar Capital Management, earned 19 city, state, and national apartment association awards until recently when I transitioned out of property management and I gave that to a company called Roscoe, the 7th largest property management company in the country, so I can focus full-time this year on my operations. And the reason why I did that is because winter is coming. Today is November 3rd, 2022, and the Fed just announced they're going to increase rates yet again. I think this is now the 5th or 6th time they've increased it this year. We're now 3.75% above where we were in January. Looks like they're signaling another 0.5 point increase in December. It'll be very interesting if you watch this in the future on what really happened. But what that means is that it's going to put significant pressure on apartment-related investments. And the reason why it's going to put pressure is that many of us, when we bought these deals, we put variable rate notes. And you may ask, well, why did you do that? Why did you not put fixed rate notes? Well, fixed rates are very common and they are the safest way. But there was such a demand and there was such a flurry of deals that we were creating pro formas, creating value add opportunities on how we can, create this renovation plan to push our NOI up in the future, and we needed this variable rate note to give us that flexibility because it didn't qualify for fixed rate debt ahead of time. We wanted to refinance out in 3 years, 4 years. Well, with the Fed's movement, that's not going to be possible anymore. You're now going to see a lot of deals come to market. So you're about to get hit up, if you're on an investment list, by everybody when they see these deals come to market in Q1, Q2 of 2023. 2023 will be a flurry, especially in the middle to the end part of the year, on people wanting to sell their deals. And not wanting to sell their deals, being forced to sell their deals. Because now the debt service has jumped maybe 100%, very likely, in many cases, from what they had anticipated. So that means cash flow is gone. That means the original pro forma that we presented to our investors is no longer valid, because we can still increase NOI, we can still push rents, but now the cash flow is gone. So they're going to get scared, they're going to dump deals, and other people are going to come in. So how do you choose the right person to put your hard-earned money and go after these big deals? Because I saw this, it's going to happen. My career got started in 2007, right before the recession, and I saw how hard it was to operate during that time, and it's part of the reason why I'm considered one of the country's best operators. But that's my story. There's a lot of guys who are going to come pitch to you that have only been doing this for a couple of years. And you got to ask them, who are you to be investing my money with? And so I want to work on right now a little checklist for you guys to first see if you should invest your money with anybody else during this potential run-up of deals. Number one, ask them what their relevant business experience is. Now, I'm going to assume you're a doctor. I'm going to assume you're a lawyer. I'm going to assume you're an accredited investor, and you make your bread and butter from your W-2s. And here you're going to invest anywhere from $100,000 to, let's say, $1 million into somebody's syndication. But who are they? What is their track record? What did they used to do before they did this? Is this a full-time job for them? Or are they just like you and they have, I don't know, maybe they're an engineer. Maybe like me, they're a sales guy, and they're doing this part-time. I can tell you, when I started my real estate career, I went full-time at this. I walked away from my seven-figure income, and I focused full-time, and I sat in that chair. And I'm glad I did, because I learned what I needed to learn to get me through the recession. You know, because when you walk into any room, you have to assume you're the smartest person in that apartment community, because you're the one that signed on the debt, not the property manager making $60,000 a year. Not the assistant manager making $40,000 to $50,000 a year, and not the leasing agent. So you have to assume that whoever you're going to give your money to has operational experience. And if they don't, why not? Why don't they have operational experience? How are they going to implement their plan? So who do they learn under? You know, because we're not born to learn how to do apartment investing. We got to learn somewhere. So are they part of a real estate club? I came out from the Lifestyle Club in Houston. There's a great club here that I work with called Total Wealth in Houston as well. That's fantastic. There's another club in Dallas, the Brad Sumrock's group, that's produced a lot of people. The difference is there's very different how we come out. Because in Sumrock's group, you don't have to quit your day job and do this full time. In the Lifestyles group, you did. We did have to quit our job and do this full time. So you create a lot of syndicators out of that Dallas club. And they're investing in a market where they've seen nothing but double-digit rent growth for the past several years. And the ones that are going to get caught the hardest in this variable rate interest rate change are the guys up in Dallas versus the guys in Houston. It's never been this, right? It's always been this. For the last several years in Dallas, they've had double-digit rent growth. It makes it look easy to buy an apartment deal, plant a flag, and money comes out. Hasn't happened like that in Houston. It's this kind of performance. We've had one slowdown after another. And so it's made us better operators. In fact, we didn't have our first double-digit rent growth until 2021. And this year, it's already back down to normal. We're down to 6%. I predict next year to be 3 to 4% when the recession hits. So again, how do you choose who you should invest with? What is their track record? Again, what is their business relevant experience? Why are they doing this and not you? What are they bringing to the table that demands $100,000 of your attention versus you trying to do it yourself? Because many of you can't. Many of you can go buy a 5-unit deal and own your own apartment complex. You start creating that relevant experience with you and your wife, you and your husband. Fantastic team do it. Some of the best teams I've ever seen were husband and wife teams, where you learn this and your mindset grows together and you each have each other's back. But this independent guy that came out of nowhere 12 months ago, 24 months ago, what is his track record? You know, I would then ask him, do you have any deals that are exposed to variable rate interest rates? Will you be focusing so much on that that you can't focus on your new investment over here? You know, so I think it's maybe a very crucial time over the next 20 minutes, over the next, 12 to 20 months on what's going to occur. You want to find out, have they actually gone full cycle on a deal? Have they bought a deal with their investors? Have they implemented the business plan? Did they hit their metrics and numbers? And what was the final return when they sold it? There's a lot of guys that had a good plan going into this and just got punched in the face with this federal interest rate hike. It took away what they had because their NOI may be still there, but the cap rates are no longer there because the interest rates are moving up. Deals that we had a year ago that we could have acquired at a, 5% cap rate, moved to around 5.5% cap rate 6 months ago to now are 6% cap rate. And now that the Fed just moved rates up again, that cap rate's going to move up again. I think it's very realistic that you're going to see apartment deals anywhere from 7 to 8% cap rate in 2023. And so if that's the case, why buy right now in November of 2022? If this is a 9-inning game in this recession, we're barely in the second inning. We haven't even come to the third inning yet. So, some of the better deals are going to be found in 23. Specifically, I think beginning in Q2 through Q4. And so that is your opportunity to educate yourself between then and now on who to invest with. So as you're qualifying them, are they a one-man gang or are they part of a syndication team? How many are on that syndication team? I can tell you, the more people that are on this syndication team, the more mouths they have to get fed. And the more mouths they have to get fed, the more deal flow they have to do. I don't have any partners. I don't have any co-GPs. I get one deal, I take it all home. But I'm not in a rush to do another deal in another couple of months. But if you're part of a 5-man, 10-man syndication team, they can't make any money on just this one deal. They got to keep pushing it forward, which means focus is going to come off of that investment you just did. The other side to that is, who's on that team? What is their business relevant experience? I was on a call the other day with some people who found this amazing deal, and they had 6 people on the syndication team. And I asked them, why do you have so many people on the syndication team? Do you need? Well, no, we don't really need. We already had the money. We just wanted to help everybody. Oh, okay. So you just want to help everybody. You want to help Joe and Tom and Susie, but they don't really bring any equity or any other relevant business experience. But now they got another mouth to feed. And because they got another mouth to feed, guess what? The guy that's in charge is now going to push to try to do another deal. You got to be really careful. Now, look, and I'm not saying there won't be some great deals next year that you shouldn't try to gobble up some, but there's going to be a lot of deals coming to the market. And the big institutions are kind of scared right now, and they don't want to go because financing is up and down. You can't trust it. You can't stand on it. You don't know where it's going to be. I saw a deal yesterday. Again, this is November 3rd. They were at a 50% LTV, and the interest rate the bank was giving them was 5.96%. That's even higher now that the Fed pushed it up, but they had to put down 50% of the money down and to have a 2% return. That's what they're projecting year one, 2.4%. Now, I'm not saying that's a bad return. I'm not there to determine that for you. But if you would wait several months into 23, you can get that same deal at a cheaper price. And if it's at a cheaper price, then you don't have to bring as much equity to the table. So you have opportunities to find the same deal today that you're going to get later on. I'm a big fan of Tillman Fertitta. And Tillman Fertitta once owned Joe's Crab Shack. And he turned it into a monster powerhouse that's what he does. He's a billionaire, right? Everything he touches turns to gold. Well, he wound up selling it to another group. And guess what? That group went through a financial crisis. They went through an economic downturn. And they wound up selling the deal, or maybe losing Joe's Crab Shack, to where Tillman Fertitta went and bought it back again at a much cheaper price. Because he knew the asset. He knew what it could do. And now they were going to give him he was going to buy it way below what he sold it for. And what did he do? He bought it and he rose it up again and created tremendous value and added it to his chain of very successful restaurants. And I tell you all that because the deals are going to be there later on. Don't be in a rush right now to do a deal. Focus on your education, like watching these kind of videos. Focus on getting mentorship from other people. You have plenty of time. We are in the second inning of what is going to be a 9-inning recession game. And the Fed is just pounding out home runs right now. And we're going to have to wait and see how this game finishes out. And so you have time right now to educate yourself by joining one of the big real estate clubs, which is how I got my education and understanding. But be very greedy with your money. Be very choosy and selective with your money. I personally am not even looking at a deal right now. I am focusing and batting down the hatches on my deals. I don't want to raise investor equity. I want to take care of the equity I have right now because I made that commitment to them. And so as we're doing that, we're seeing where our struggles are, and we're putting that focus on. But I couldn't have that right now if I was looking at the deal. I'd be thinking about that over there, not having full-time focus over here. I want to stabilize this so that in 23, when my portfolio stabilizes, I can go buy some other deals. And in that, who's on your team? So you're asking who the syndication team is. Who's actually running the deal? Who's the property management company? For, for 11 years, I had my own property management company. And the reason that I got out of it was that staff became a problem. There's an expression I like to repeat. Real estate's easy, people are difficult. And that's exactly right. When I lost the ability to recruit staff and replace troubled staff is when it was time to get out of property management. I could no longer handle poor performance and not be able to replace it on a dime. I had to absorb it. I had to keep it there. I had no one else to put there. So we had to babysit them, taking time away from somewhere else. Somebody put your 2 weeks notice in, I couldn't go and replace those people. I had to run it through a stable, through a tag team, part-time approach on who's going to be that property manager. And we never had consistency in that chair. And so I made the decision to work with one of the largest property management companies in the country. Actually, the same group that Grant Cardone uses. And the reason why I did that is because they have a 15-person HR team. So they can go out there and go to Indeed and go to Monster.com or whatever the latest resume sources are and bring in people right away, interview them and get them in the chair. In that short amount of time, I've already seen that happen 3 times where they realized we have a hole, they went in, and within 2 weeks, we had somebody there. Magic to me because I couldn't do that. There wasn't enough labor for me to choose from. Then you got to train them up. I didn't have the full training team. At one point, we had 132 people in our company. I couldn't find the time to train all these new people that were coming in. So you get poor performance, or you get performance that's substandard to what you're used to. Where I'm at, they got a 15-person training team, which is fantastic because they're out there implementing their systems, their processes, and their procedures. And that's what it's going to take right now to get through this recession, is you're going to have to take processes and procedures that are steadfast. The other thing is to ask your syndicator, how are they planning to battle through the recession? What are they going to do? They better have a detailed plan, and it is not a rehab. That's not how you get through a recession. You get through a recession by focusing on the residents, by keeping heads in beds. And how do you do that? You open every single channel to communication with them. So you read every single review online and you start to manage your reputation. And if you have an issue, you take care of that issue right away. And you ask them to either take down the negative review or you get positive reviews from everybody else's success stories. When it's time for renewal, you want to take a pad just like this, and you don't want to send them an email with their $100 rent increase. You want to hand them the rent increase. And of course, they're going to look at you. What are they going to say if you give it to them? They're going to start talking. And they're going to tell you what they like and probably what they don't like about where they live. And that's what this pad comes in. You will start writing those things down. And if they need a touch-up paint, you would do it. If they need a new appliance, or they potentially need new carpet, you would do it. Because winter is coming. And you're going to have a shortage of shortage of qualified residents next year as the unemployment starts to grow. If they can't tell you that story, you got the wrong guy. If they can't tell you that you need to now go to all work orders for the community and try to make sure they get done in the same day, you're going to have a problem. You should never have more than 5 to 7% of the total work order activity versus the unit count. So if you have a 100-unit property, you should never have more than 10 open work orders. We have a policy right now. We want to end the day at 0. That's what they're doing at my management company. That's what we did before during the recession when I went through this before. is that you want to make sure there's work orders are done. You want to give, the whole point is you want to give your residents no reason to want to leave. So when you're there and you're trying to get that $50, $100 rent bump in a recessionary environment, you're going to write down what their issues are. They need pest control, you give them a free pest control. They need a touch-up paint, you write it down, and you do this. You get them to sign the lease, and you schedule that, and then you follow up. You get on the phone and say, hey, how are you happy with your completion of your work order? How are you happy with the new appliance that I just put in there? We got to go back to basics. And you got to take care of your staff. This is no longer the employment where there's 10% rent growth and there's so many people. Because what's going to happen is they're going to double up. That's what happens every single recession, is that they double up. When they can't afford, they move in. What helps us is there's not enough housing. So it's gonna offset. It's a little bit different than before. We had plenty of housing in '08. Here, there's still not enough housing. You had 14 years of population growth, 15 years next year. So that will offset some of it. But you need to be asking these kind of questions with your syndicator. See, I don't call them operators because most of them aren't operators. Most of them never sat in that chair. They've never leased an apartment. They've never scheduled a move-in. All they've done is come to you, had a pitch deck, tell a good story, and maybe touch the renovation. That's all they've done. They don't know how to keep heads in beds. They're going to rely on the third-person property management company, not third-person, third-party property management company. And guess what? Let me tell you the little dirty secret of third-party property management companies. They have no skin in the game. They didn't sign on the deal. They didn't put any equity in the deal. They're hoping to give you results that sold them to get the business, but you don't know. They're not going to be there late at night. I can promise you, I've had deals that are where they're not need to be. I'm there on a Sunday walking the property. We're having a meeting almost every single day on our portfolio. Once every week, we have a big portfolio meeting to cover half the group, and then the rest of the time, we spend time going in on individual deals that need special attention. These are the kind of questions you want to be asking of your syndicator and find out if he truly is an operator, because to get through the next 12 to 24 months, you're going to need an operator sitting in that chair. You need to find out what his success was in the past. Because if he wasn't successful in the past, why is he going to be successful when the world's falling down? When there's employment rising, when rental increases are coming. So that deal may be the right deal to invest in, but you may be picking the wrong guy to invest with. So always remember, you want to back the jockey, not the horse. The deal may be great, and there'd be an opportunity to get something at 20, 30% of what it could have sold for a year ago. But if you pick the wrong guy, it's not going to matter. If you pick the wrong jockey, it doesn't matter how great that horse is. It's not going to win the race. I hope this was great for you. It was an opportunity to be very real, very blunt, and explain to you what's coming with the recession in 23 and how to choose the right team to invest your equity dollars. If you'd love to learn more, please give us a call at 832-942-1196 or send us an email at send me an email at investing@rockstar-capital.com, or you can just send me an email at robert@rockstar-capital.com and we'll chop it up. I hope this was entertaining for you. I hope it was beneficial. If you'd love to hear more, please follow me on my Instagram channel at Apartment Rockstar, or find me on YouTube. We got a lot of content there and we're pushing it out. We'll see you next time.
All right, everybody. Well, like I said, pretty short video, but I hope it was really informative to you, give you a little bit of an insight on how to go about approaching hiring or investing with a syndicator. If there's any other questions, throw them in the chat now. If not, if something pops up, because inevitably, a question will pop up after we hop off here, give us a call. Give us a call at Quest, 855-FUN-IRAs. You can reach out directly to our IRA specialist team at 281-492-3434 and just ask to speak to an IRA specialist. We'll be happy to help you out. All right. But if no more questions, guys, then you guys have a good weekend, and we'll see you at the next SDIRA Tuesday. That's going to be happening this upcoming Tuesday. You guys have a good one.